Hey traders, happy Tuesday. Welcome back to the final hour. Chris Pulver here. Um, Markets up a little today. Not something to get super excited about. Came back to basically fill the gap from Friday. That's pretty much my takeaway from today. Let me get this out of the way. Let's go to our chart right here. And we have Friday's close, Monday's gap lower, Monday's rip up to get into gap space. Today, a little bit more follow through and flow up into the 601, 602 handle. And we pretty much paused. So we grabbed a nice little profit this morning out of SPX. Had some sideways motion for the rest of the day. Market makers defended the 602 to 605 area. I was looking for a little bear call spread or a broken wing butterfly up at the 605. The credit just never took the way that I wanted, so it didn't get filled. We pretty much have a neutral day where call option volume, put option volume sentiment is dead even, 36 and 36. So nice little indecision day as a whole. No major catalyst that I see outside of earnings this week. I mean, had a nice rip out of China, nice rip out of gold and silver. That's where most of my earnings came from today, or gains rather. So up 16K on the day, back up 100 some $1,000s to start off the year. Here is the positions that I want to take a look at for the near-term expirations. So I've got some trades to manage on Microsoft and Tesla. Microsoft, I put in a broke wing butterfly today. That pin price is 405. Tesla, I've got an earnings trade on that I did last week, and I need to see. It still hasn't pushed far enough. I have a what is it? Let me just check one account here. 360 by 350, 750. That's a bear put spread. 430 by 432. That's a bull put spread or bull call spread. Just two debit spreads on the cusp of earnings, and took a right. It's like expiration is Friday. So if I don't get the push down to 360 or 350, 750, I'm going to take a small loss on that one, and that's fine. But it just was an earnings play that didn't have enough momentum. Snapchat, I have some secured puts 12, 11.50, 11, and 10.5. We have earnings on Snap, I believe, today after market. So hopefully I will see. There's two ways I can play this. One is I'm okay owning the shares, but this is the trade setup. So I have a 12, 11.50, 11, and 10.50, all puts. I'm willing to own the shares. That'd be 400 shares assigned because each one's one contract. If earnings comes out solid and we push above $12, then I'm just going to keep the 309 credit. So one scenario is price goes up, stays above $12. I pull $309 of income without having to own anything. The other one is we push lower. I take some assignment by the end of the week, and I repair and quickly repair, considering I would have anywhere between 1 to 400 shares. I try to flip this for anywhere between $1 to $500. Let's say $1 to $400, because if I can make $1 a share, I'll be okay with that just as a repair. Snapchat overall, though, I do like the fundamentals, and the price is not too bad either. So let me go into Snapchat here. Let's take a look. And come on, Snapchat. Get rid of this one. CBOE. Snap. There we go. So we are trading 3.6 price to sales. We are trading below fair value in the teens compared to a Pinterest or a Baidu. I cannot believe Baidu is 1.7x price to sales. I'm long Baidu. I'm long Alibaba. China is lifting animal spirits since Chinese New Year. The 29th, usually that's about a 3 to 4 month window. If China's getting bullish, I want to be bullish on China. Only a couple of plays there. But anyway, Snap, price to sales I like. So watching closely. Earnings, we'll see what happens. Price-wise, strong support around the 850 level. Hopefully we're not doing too much lower than that. If I do take ownership, it's going to be in the 10 zone. I can calculate my exact earnings. So 12 plus 1150 plus 11 plus 1050 divided by 4. So that would be my break even on the 400 shares. But if I get my credit from the puts, 309 by 4, I get another 77 cents. So that's 77 cents divided by the 1125, or minus the 1125. So minus 77 cents. So I'd own it around 1050. 1048 would be my break even. So if I go in and sell a 1050 call, cool. I sell a $10 call with additional premium. Maybe I get an extra 10, 15, 20 cents to repair it. That's fine too. I do an $11 call for 20 to 30 cents. add 50 cents plus the credit on a repair. But earnings are today. We'll see what happens. If price pushes higher, great. I'd love to see this thing back into the $12, $13 zone. Market makers are expecting nothing crazy, about a $2 move. I'd love to see a $2 move from here, which would put me up around 1164. Or I'm sorry, 1364 if we get above, and I need price to stay above the 12 so I avoid assignment. If I get assigned, it's okay. I would just be quick to repair the trade. That is all. Okay, what else do we have for expirations? That's Snap CNG, that's an earnings play. AMD, that's an earnings play. EA, that's an earnings play. SPY, 10 days out, this will take me into next week. I have some shares. I've been doing some collars on the SPY. I have some income trades, lots of income trades on the SPY. I mean, I'll show you here, lots of trades going on the income side of things. So the NASDAQ, a couple plays there on QQQ, SPY, a decent chunk on SPY, SPX, a decent chunk on SPX. Took two winners this morning on daily profit play, and also XSP, which is the kind of the mini version or the micro version of the SPX, also cash settled. Have some trades running there. If I take a look at my CapEx, this is where most of my allocation is. So just for this particular account here, so decent amount of SPY, decent amount of SPX, a lot of options. So I don't really own shares of SPY. Trading the index. So speaking of, did I get filled on? This did not take. Okay, never mind. I'm going to go ahead and cancel this order. And I think my NDX trade should get out of that CapEx requirement. Let me refresh this. I'm going to take them. All right. Say bye to the boy. This is my other trade partner here. He's cooperating nicely, though. All this financial stuff bores him. All right. So this is what the overall kind of the big pie chart looks like as far as percentages. It's nice how I have this portfolio report with tasty trades so I can see in the CapEx allocation where things are at, and also to see what type of outliers. Like, for example, if you ever get assigned shares and all of a sudden you don't have the cash to cover it, or you don't have the margin to cover it, then you'll pop this up here and see that there's a huge allocation to that said underlying asset. So this is a nice way to get a snapshot of where are most of the trades that I have. You can see here some decent exposure, ratio spread on NVIDIA, a lot of earnings trade or a lot of option trades on SPX, option trades on SPY, option trades on Qs. I have some shares of Baidu, have some shares of RKT, have a diagonal on Pfizer, own some shares of IBIT, have those puts on Snap. So I can go across the board. And some of these profiles are going to look different. So for example, this is a portfolio margin account. Same thing here. So futures options, I have some hedges, SPX and SPY, again, mostly option trades. If I go into a cash account, this one is a strict cash account, and I just got this one about a month ago, or less than that actually. And again, some plays. Let me try this one here. So let's go to that cash account. Very, very simple. Go to this portfolio margin account. Indexes, a little bit more diversified for the portfolio margin. A lot of buying power. Go to just a cash account and right there. So very picky, right? Trading silver, trading some Bitcoin, trading some basically short-term treasuries to get 4 to 4.5% on my unallocated cash. Some uranium, Intel, Alibaba, some SPY, and some QQQ. So nothing terribly difficult, but that's pretty straightforward. Here's another account just to take a look at something simple. Fairly concentrated, bigger position in Amazon. This was an easy gain. I'm up about 20K on this for Amazon. I just did a roll today. So I rolled out to August and I rolled my strikes up. I did a 220, now rolled it up to a 225. So that increases my profit potential. I still grabbed another $3 of credit, even though I'm going out further in time. Amazon has earnings this week, so I'll be watching those long puts, which I have a 125 long put. So I'll keep an eye on those for any type of protection. And then on the call away side, we're trading at 241, 242. If Amazon has solid earnings and pushes higher, then most likely I will just keep trying to roll it. Give myself some time, roll it out by a couple of bucks, roll it out further in time, grab some more credit, and just keep fighting the good fight. So All right, that's a little snapshot there. Trades for today, trades that I was liking. I literally looked through pretty much every major notable earnings play this week, and these are the trades that I am in. I did trade one on EA Sports. I want to highlight that one. I did take a trade on EA Sports, so these are all coming after market today. AMD, I didn't like the setup on Google, so I didn't trade Alphabet or GOOGL. Snap, like I said, I've got the cash secured puts. Chipotle, I'm doing just an earnings play. I have some ratio spreads on Chipotle as well. And then Electronic Arts was a nice little liquidity play. Hopefully, we're heading up to like 130 on that one. Tomorrow morning, Uber and Disney have some exposure there. Qualcomm after hours, everything else. Amazon on Thursday, but that was it. I went through all these stocks one by one. Didn't really like any of the setups, so I opted to just stay out for right now, which is totally fine. Okay, but we have more earnings next week. Let me see. Actually, go into options play. And let me find some liquidity levels for next week's stocks. And just give me a second here. So going into earnings, going to make me log back in. How's everybody Tuesday so far? So far, so good. Good day overall. Hope so. All right, let's have a look here. So going out to next week. So this gets me through today, tomorrow, and Friday. So I'm kind of done with these. I did my research. I priced out some. I'm in a handful of earnings trades. The rest I'll let just do their thing. Going into next week, I want to find some notables. We have the 10th. We've got McDonald's. I see that there. BP, Coca-Cola has earnings. Shopify has earnings. DoorDash has earnings. Zillow has earnings. SMCI for the semiconductor space has earnings. Let's see here. Cisco has earnings. MGM, I think, would be interesting. I'm not sure if that's just the hotel group or the casino side. I like LVS and WYNN. Alibaba has earnings next week as well. That'll be a good one to watch. I'd love some big positive movements on Alibaba next week. Airbnb, got some ratio spreads on that one. Coinbase, DraftKings, Palo Alto, and Win. So I'm going to make, let me take a screenshot of this and highlight a couple here. And by the way, if anybody is interested, I am offering an earnings course starting next week on the 10th. So for a list of these trades, I'm likely going to be looking at some option trades on probably the following. If I box this in here, let me see. Probably looking at trades on Shopify. That's Gilead, SMCI, maybe. I mean, SMCI was one of the best performing stocks that turned to garbage, so probably not. Zillow, maybe. A lot of potential uncertainty in the housing market right now with rates as high as they are and supply still catching up. But Cisco could be a good one. MGM, I'm kind of curious on the state of the consumer and leisure and hospitality, which a lot of the jobs are still coming into. Win, Palo Alto, highly volatile in that space as well for tech. DraftKings, decent volatility. Super Bowl is also coming this weekend, so I'm curious how DraftKings looked for Q4 earnings with some of the bigger plays and moving forward. You got Super Bowl, you got March Madness. I mean, my gosh, you can pretty much bet on everything. And this last year, I mean, I know it's not DraftKings, but you look at something like Polymarket and Kalshi. You've got people betting on elections and people betting on the Fed and people betting on. So I mean, it's starting to drip into the financial markets, what I think is really interesting. Coinbase, proxy for Bitcoin. Another good opportunity for some profits. BTI, that's a dividend play, kind of like Altria, like MO. Airbnb, watching that one for next week, and Alibaba. So that should give me a decent amount of action next week. I will start doing webinars on this service on Monday. So if you're interested in joining me, that's a good spot. I'm looking at trades for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. If I take, let's say 3, 4, 5 of these trades, as long as the math makes sense and the probabilities are high, then we've got some good action next week. So if you're interested in that, stay posted. Let me know, and I'll share that in my Telegram channel So if you'd like to join my Telegram, it is right here. So here is Chris Pulver Telegram. That's free to join. And also, if you'd like to be in my Discord, it's also free to join. Oops, let me do a 1-day invite for Discord. Chris Pulver Trading Discord. Okay, so news breakers, major catalysts. We'll start February 10th. There you go. Just green and yellow. This is just it's a spot check of liquidity. So if you want like high liquidity options and you want the bid ask to be really really tight, bid mid ask to be tight, these are the best ones. So it's separated by mainly liquidity. So like your 4-star liquidity, 3-star liquidity. If it's in white, it's mostly an illiquid option. So I'm not going to take that. So this is green versus yellow, just like high liquidity, easy to get in, easy to get out, easy to get filled. Easy to take pretty much whatever strategy you want. So I like that when I can look at, doing debit spreads or credit spreads or anything creative like a butterfly or broken wing butterflies. I do some iron butterflies as well. So it really just depends on what the math looks like. I'm trying to give myself the highest probability for profit and not necessarily like the biggest profit because earnings sometimes, does what price is expected to do. There's a reason there's market makers. But I'm looking to see, where we have these earnings lie. Do we go above the expected move? Do we go right at the expected move? Do we go less than the expected move? And I want to price things out. So I'm looking at the implied volatility. Is it better to sell the option or is it better to buy the option? I look out the last 10 earnings reports to see what the stock does. How often does it get to that expected move or not? And I kind of base it all. It's better than a coin flip, right? So if you've ever traded earnings before, sometimes it feels like the stock could be bullish, but the stock drops on earnings, or the stock could be bearish, but it jumps on earnings, or there's no real rhyme or reason to what price does what it does, right? And that can be very, very frustrating for a lot of traders. So my style is I price it out mathematically, look at probabilities, and if it looks like a good trade, I'm willing to take the risk. It's usually like a 1-to-1 or better. I'm looking for that kind of 1-day pop after earnings, 1 to 2 day follow through if it goes in the same direction, or if I'm fading it. It's something I take and I manage usually within about a 5 to 10 day window, or less. I mean, oftentimes earnings is if I'm right, it's pretty easy to be right and make money. If you're wrong, it's easy to get out and take a small loss and just keep trading. This is something we definitely want to be considering trading through. Okay. FOMO kicking in with gold. Why? Let gold do what it's going to do, man. Let me hang on a second. Let me bring this back here and I'm going to bring up there. I'm going to take a screenshot of this so I can look into this next week. All right, so get rid of that one. I'll keep that one as a reference for next week. And everyone that's jumping into my newsbreaker service, we will hit the ground running. We got lots of trades I'll be looking at next week. Okay, yeah, gold, I mean, whatever. What are you going to do? Are you a short-term trader where it matters that much that you're like, oh, I missed out? I mean, look, man, long-term, I want to be bullish on gold. This is clearly a safe haven bid, but I mean, I don't know what to do outside of just wait. It's like if gold goes higher, I'm going to enjoy the run and I'm going to enjoy the extra. I mean, if we get to $3,000 or more, I'd love to see gold get up another. I mean, it's a whopping 5 or 6% upside, and I still wouldn't necessarily say I'm taking profit on gold, but if we hit, 3,000 to 3050, I think we are likely going to have a pullback and also be mindful of the fact that we stretched away from the 200 moving average. And we also have a bar count where we haven't hit that 200 moving average for over 300 bars. I don't think we're going to have this crazy runaway move on gold. And if we do, it's likely going to end very abruptly and violently. And I don't know when, and I'm not going to call the top, but at some point, if we just go up and up and up and up and up, I mean, that's where you just trail and enjoy the run. But eventually, when this tops out, we are going to have a correction on gold. I think on a positive side, the dollar has been getting weaker. So the DXY has been down, gold has been up. You have safe haven. Why? Because you got trade war uncertainties going on right now. That's essentially what Trump led with administration wise. And now we're going to see where things are at. I just listened to an interesting podcast on basically using the bond market or the stock market as the guardrail to see if this market can stay in the lane. Meaning this, Trump is the type of president that if the stock market tanks, he's not going to take ownership of why it's falling. He wouldn't take ownership that it's, tariff policy and global uncertainty and geopolitical tensions. He wouldn't take ownership or accountability for that, but he will jawbone the Fed and say, we need to cut interest rates. This, the stock market can't be falling, blah, 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 blah. He'll be a very vocal president for everything that looks bad. If the bond market does something silly and breaks, or we start to see a failed auction, we start to see the yields are going higher and inflation's going higher, there's going to be a very vocal president that is trying to basically jawbone his way through guardrail of the bond market, guardrail of the equities market. As long as they don't crash, things are okay. We can throw out threats, we can threaten tariffs, and we can threaten sanctions, and we can try to balance a little bit better or decrease our deficit a little bit. But until something were to break, right now the markets act as a pretty interesting guardrail. So again, interesting podcast to just listen to today, actually. And if you're wondering who hosted that, it was Market Huddle. Those are a couple fellas out of Canada that do a great job. Kevin and Patrick, I've followed them for the last few years, and they run a great podcast. So anyway, the guy I think that was on, he was a Wall Street Journal author. He had some close times with Powell and the Fed and Janet Yellen. And anyway, just interesting commentary. But I thought it made a lot of sense. It's like, right now, as long as things just kind of stay in the lane where there's nothing terribly bearish, and maybe the market's struggling to go higher because of all the uncertainty right now, it's fine. But meanwhile, gold is still maintaining a really good bid, right? Gold is really well bid. Silver is also playing catch up, which I'm super happy with. So one of my larger positions, I actually prefer the technical side of silver more so than gold. I've been talking about this a lot since last year. Silver is one of my bigger positions ownership wise, and I'm trying to get this one to target 1 here and target 2 here. And I'm willing to hang on to this for some type of bullish channel until my profit target. So whatever that looks like, let's see if we have some type of channel like so. So do we get up into fresh highs into $36, $37? Okay, cool. I'm long basically since this level and this level, and a breakout here. So anything in the low 20s, I'm long SLV and long silver. Also trade on SI, which is silver futures, and GC. I had a lot of futures trades last year on SI and GC. Not so much this year because I'm looking more long term. So I'm doing a lot more credit spreads on GLD, credit spreads, debit spreads on SLV, also owning the underlines of GLD and SLV, just dollar cost average into them. Okay. All right, class. We will have class. So if I run the service next week and I start my my Newsbreakers course, I'll probably end up doing a class by Tuesday. I will run the class. I think that's important because one, I'm looking to take trades next week, so we're going to jump right into it. And also, I want to make sure that everyone is up to speed with the type of strategies, the methodology, and how I'm looking to price in a lot of these trades and options for the winners. Okay. Let's see here. Kiguru is asking, how much cash do you need to start trading options? Not a lot. Honestly, options is a great way to start trading. If you've got a couple $1,000s, you can start. I like kind of the 5,000 minimum is a good starting point. 5,000 to 10,000 is a good starting minimum. You can take trades for as little as $20 to $50. It's very easy to get started. It's low barrier to entry. It's low cost. I would say defined risk is great. Inexpensive. Long options is fine. But just the basic spread of like risking no more than $100, it gives you some reps, right? You've got some time to kind of learn the process, understand the line in the sand, get the pros and cons of these strategies. So a good place to start, if you're interested cash wise and number wise, if you'd like to learn more, I think I've got a great starting point. Not $27, quick options, which is $27, but here, check it out. So I can share this. There's a couple ways you can go about this. Okay. So I have a course that I built for $27 called Practical Options, and it is intro guide. It's about 30 pages on a strategy guide, long options where you can buy calls, buy puts, bullish spreads. So you can put in a defined risk reward and defined risk. So it's basically your upside is capped, your downside is capped, but bullish spreads if you want to trade the market bullish, and bearish spreads if you want to trade the market bearish. So for $27, if you are new to options, I think this is a great place to start. Now, I will say this. You can obviously buy this a la carte, and I'll share the link right here. And for $27, you can get started. You can give me feedback on trading options. Did it get you started? Does it make some sense of things? If you like this, I make a reference to my full course, which is Practical Options, the full course, and that is right here. This is Practical Options, and this one is a 72-page strategy guide along with 11 videos and 13 of my favorite strategies. And in addition to that, go into the key terms and definitions and vocabulary and jargon that a lot of people are so overwhelmed with when it comes to options trading, navigating a risk graph when it comes to your reward to risk, and how you can, if you see a chart that looks like this, for example, okay, does anybody know what this means? I do. If you're an option trader, this will make sense, right? This is a broken wing butterfly that I placed on Microsoft. Okay, does that mean anything? No. This is just the way that price works out. So my trade is this. If Microsoft stays where it is, okay, if Microsoft stays where it is, I'm going to keep about, I think I got in for like, I don't know, 40 cents or something like that. So 40 to 50 cents. Okay, it could be less than that, but either way, that's my credit right there. If price goes up, I still keep the 40 to 50 cents. If price goes down, I have a $2.50 profit trap that gives me an extra $250 a contract. Now, in order to get that trade, it's got to be perfect. I've got to pin this thing at 405 at the end of the day on Friday, which is unlikely. But if I'm anywhere in this profit trap, anywhere at all in this profit trap, then I can turn this trade into a bonus. Right? We've already had earnings on Microsoft, so I'm good with that. Okay. Now I want to see, does price go up where I still keep my credit? Does price go down and get into my profit trap by Friday? Time will tell. I'll manage that trade on Friday. Right? Now, something simpler, some of you might know, like I'm going to buy a call. Okay, that's fine. If you want to buy a call, let's say on the SPY. Okay, you just buy a call on the SPY. So let's go option leg. You're going to buy and say that for the end of February, you believe that the SPY is going to be bullish. So you go out to the Feb 28th, you buy, we're trading at 601 right now. If you want a little bit of intrinsic value, you can just buy it at the money. Okay, so this is what it looks like. So for $10, which is going to set you back $1,000, this is why I trade spreads a lot. You can buy this and say that's right in the sweet spot. I mean, my software does a great job of telling us, look, if prices go up, this is the best way for us to get bang for our buck. So if we go higher on the SPY, this trade is probably a good probability of profit, and it's unlimited profit potential. But the probability of this trade is where we are currently sitting. This is the real price of the SPY. This is one standard deviation to the upside. This is one standard deviation to the downside. If the market goes up, then we are going to see one standard deviation move offer up probably, you take a $10 position and turn it into a $20 credit. Okay, which is not bad. So we have potential reward to risk that's favorable, but we have to see price be pretty bullish, right? We got to get to new highs, which is around 610, 611 right now. Is that going to be the case? I don't know. So I'm not interested. I'm just showing you like this is what a risk graph looks like. So I explain all that in this course. Okay, key terms, risk graphs, going through option chains and several broker accounts. So I think I do Tasty Trade, Thinkorswim Web, Schwab.com, Webull, Robinhood. They all kind of show the same thing. It's just helping traders navigate through that. Then you got the strategy guide and the full walkthrough, and then your bullish trades, spreads, calendar spreads, butterfly spreads, broken wing, and standard, and then strangling iron condor for more directionally neutral trades. So I would not jump right into the full course unless you're comfortable with the quick guide. I also give this full course away as a bonus to any members of my daily profit play, waterfall income, double up alerts, and soon to be newsbreakers. If you are in those services as a lifetime member, I give you this for free. So you get the $497 course included as a lifetime member. All right. Key Guru for $500. I mean, again, you can do some work with option trades, but you're only giving yourself probably, 10 to 20 trades to work with. And I mean, again, it's a couple ways to approach it, right? Can you trade options with $500? Yep, you totally can. Are you going to be able to trade for months and months and months on it? I mean, if you pack away some winners, you can. But I honestly, I'm just going to be really transparent. I mean, I'd like you to have, maybe a $2,000 account to even consider getting started. It doesn't mean it's expensive, but $500. Look, if you told me, Chris, I'm going to trade Forex for $500, what can I do? Nothing. I mean, you can trade nano lots and micro lots, and you can try to lose like less than, 10, 15, $20, and you can survive, but it's like $500 is pure risk capital. So $500 in options, that's defined risk, and you're trading with different asset classes and indexes and different stocks. So it's probably going to be a trade that costs like, I can take trades that cost me $10 to $20, but that's also pure risk. So how many trades can you take? If I risk $10, I get 50 trades. And if I'm right on some of them, then I make some money and I can move the needle, and they can be good reward to risk setups, but you got to know that stuff first. Otherwise, I mean, a couple $1,000 just gets the buying power out of the way, and there's a lot of trades you can take that don't cost an arm and a leg with a high probability. And I think that $500 account can grow, but couple $1,000 just gives you a little bit more wiggle room, right? But I just don't want to see traders with capital like that. I mean, Forex, yeah, you get 201 leverage if you're a non-US trader, and you could trade nano lots, but which is like a penny a pip, and you can stay in the game and survive and show like, oh, cool, I turned $500 into $510, and I traded my ass off making profit. Okay. Or, I mean, a little bit more risk, like $10, $20 or 10, 20, $30. Option trades, you can stand to make 10, 20, $30, which might not seem like a lot, but you could quickly make $100 in an option trade or a couple of them, and all of a sudden 500 becomes 600, 600 becomes 1,000. So I just think it's a more fair asset to trade. But $500 is on the tighter side, because U.S. traders, there's good brokers out there that they charge very little on commission, maybe 60 to 80 to $1 a contract. But it adds up. I mean, today my winners, I paid $2.40 to be right on my SPX, but I walked away with $50. So it's fine. Pay a couple bucks. It's cost of doing business. But I will say this: you can always start somewhere. If you make excuses like, oh, I don't have enough money to start, well, then save money and start somewhere. But can you start for $500? Yes, you can. But knowing what to start with and knowing what strategies to consider that are low cost and low risk is definitely a better plan than just, taking a trade and saying, I need one trade, Chris. This is my one trade with options. That's not fair. That's not fair to me. That's not fair to a service. That's not fair to any trader that has, if your bell curve of sampling looks like this. Okay, here's my account. I have one trade. Do I win or do I lose? Nobody knows, right? I mean, I can give you the perfect trade and the perfect probability. There's nothing 100%. And so that's why I'm saying small trades of whatever you can do to take lots and lots of trades, right? So if I have like little tiny losses, that's fine. I start making some gains. What's the market do most of the time? I start sprinkling in my sample size, and I'm getting all these little winners and all these winners. I mean, give myself 20, 30, 40, 50, 100 trades to show that, number one, I can stick around. I've got some stay power, right? And am I growing my account or am I not? Am I breaking even or am I better? But more trades, the better. And that to me is like, that's the biggest edge in trading options. Is it's a numbers game to me, that as long as I'm trading, 500 to 1,000 trades a year, which is on the light end. I mean, I think last year I probably traded 4,000 to 5,000 trades per account. So yeah, it's very, very active for me, but that's also what gives me the little bit of an edge to know that mechanically and systematically I can carve out some profits. Okay. All right. Let's see here. Got to find the profit traps in the course. I just like it when it works. I mean, the profit traps are the sweet spots, right? I mean, it's not the plan. Like when I take a broken wing butterfly, or I do like the little call condors or put condors, those trades are not aimed at profit traps, right? Like that's the bonus. That's the sweetener. But they're there in case I need it. It helps me lower the risk as well. But again, I mean, Phil, we can talk about that if you want to look at some of those profit traps and those strategies. But a lot of those trades are taking, you got to take those profit traps into expiration to get that bonus. Okay. All right. Anyway, let's talk through some other stuff. So markets wise today, SPX up about 0.7, SPY up 0.67, equal weight smaller. It's interesting how there is such a divergence between the SPY and RSP this year. So that's your S&P market cap weighted. This is your equal weighted. NASDAQ's up 1.15 in the Qs. QQQE, which is equal weighted, only up 0.6%. Dow is, fighting the good fight just off the all-time highs. Didn't quite breach all-time highs. Also, I think this is an index that is probably going to go sideways. So I want to see, what this does. Does it go back down here? If it comes back down to find this 200 moving average, I'm looking at a lot of these indexes as a potential, 7 to 10, potentially 15 to 20. On the scary side, 15 to 20% corrections. On the lighter side, with some indecision and volatility, probably 7 to 10%. I would expect that. at some point this year. We've already had some scares of 2 to 3%. I mean, this recent drop from the top in December. I mean, the Dow was down 7%, right? The Nasdaq I think was down 7 to 8%. That was down 7 and change. The S&P was down just off of those highs right there, down about 5.5%. So we've had some pullbacks. I mean, the Russell gave back a lot, including through the election gap. The Russell, I think, was 11+%. Russell corrected 12.67% from top to bottom recently. So we've had some volatility. But at the same time, and I've said this for the last couple months, I do expect there to be some resiliency. And that's why I go back to the initial thought of right now, the markets are serving as the guardrails to make sure that if things are okay, we're going to see resiliency in the markets. They might grind, they might chop around, they may not go impressively higher, but they also may not go dramatically lower. So we're not scaring anybody to the downside. We're not wowing anybody to the upside. We just have to find a way to trade and exist. And I think the best way to do that is through just trading options. And it's a lot of income trades, and it's a lot of strategies to give me some margin for error. All right. VIX is back into the middle. We've got 16 to 17 on the VIX. The VIX 1 day, also in the 15s. I mean, greater than 10 is good. SVXY still waiting to get some dips and pullbacks in that one. That's basically like a short VIX instrument. Dollar index, nice fake out from Sunday's open, right? We had this big rejection on a gap higher, and Sunday got faded hard, which I'm totally fine with. I'd like to see the dollar pull back to 106 or 105.50. I also wonder if the dollar index is also sideways. Do we have support in here? Are we going to see some type of choppiness on the dollar index here? Are we going to see some type of range trade on the dollar? Maybe it works its way back down into some support, and then we come back up into highs. This would be the range that I'd be watching for. Maybe the dollar's not going higher. It's not going lower. It just stays sideways. Bitcoin, same thing. I expect a lot of indecision. Oil trading back at 72. USO trading back in the mid. Oil back up to 72. Let me see what my oil futures are at. I think I went out to March or February. March 17th on oil futures. I did just a typical 45-day expiration. Threw it in here. There's some future oil. 1, 2, 3, 4. And it's trading for, I collected 20 cents. It's trading for 18 cents. So I got a little bit of profit on it, not a bunch. I'm trying to get after a 50% take profit, which would take this down to a 10-cent debit, and I'll close it out for about $100 a contract. But price is doing exactly what I want it to do. That is good. And I'm just going to see if I can let this thing continue to deteriorate into March. Natural gas, I'm long on UNG, but this is a trade out to 2027. Gold, like I said, don't have FOMO. It's like, yeah, gold broke the highs. Look, you could have bought the highs, but what happens if you buy the highs and then you get a pullback? What happens if we're up here, stretched away from this high all the way back to this 200 moving average, which is about 11% away? Okay, now look, I think this is a fun little ride to take up to new highs. I'm not trying to stop gold. I'm not trying to short gold, but I'm trying to be ready and opportunistic. If we do end up pulling back on gold, I want to be scooping up some discounts. If I don't get a discount, so be it. This can run, this can run, this can run, this can run. Eventually, it will break a trend line, and I'll be taking some profit, and I'll be looking to get out of my positions when this looks like it's time to get out. Right? But if safe haven's going to drive gold higher, and it's driving for safe haven and dollar alternatives, and Bitcoin's fine, great. I'll enjoy it. I'm probably not going to trade a bunch though. Credit spreads are fine, but I was hoping to get pullbacks. I mean, I bought some exposure here where we had a pullback. I added some exposure on credit spreads. Same thing there. So the higher we go, I'd have to see a pullback into this zone for me to say, okay, maybe I'll put a position on for there. Maybe. Right? But I think this 200 moving average and bar count is probably going to get hit sooner rather than later. So a little cautious. Yep. That's a great comment there for Lano. Thanks for posting that. Okay, gold futures, gold, GLD, long, that's fine. Silver, still like silver. SI silver futures, got some positions in here. March 2650 by 25 by 26. That's looking good for profit. Let me take a look at that one really quickly. So Japanese yen, ES, let's go SI. Here we go. So this one, 1, 2, 3, 4. It's already up $255, and my max profit should be 0.060. Let me take a fresh trade on silver. So if I go silver, It was a credit spread, so 0.060. It's about a $300 profit per contract. So silver's looking good, and if my max profits are on $300, I'm already up 255 of that. So I don't necessarily have to wait for. I'm right now. It's like my max profit's about $300. So what's 255 out of 300? Oops, 255 out of 300. So I'm up about 85% of my max profit right now. So for capital efficiency's sake, I have let's see here. I still have 50 days in the trade. I mean, for me to get an extra 15 cents a premium to wait 50 days, it's not really worth it. The question is can I get the trade to close out where I want it to close? The trade price is 60 cents. If I want to take, let's go $300 divided by 0.060. So that's a 5,000 multiple. So if I want 255, I need to be able to get out of this thing with about a 9 or 10 cent debit. So right now, I mean, if that's true and I get out of here for like a 1 cent debit, then I can get out of this trade. Let me see if this will close. I doubt it's going to fill me there. Let's find out. So that is a debit. I took it in for credit, close it out for a debit of 0.01. I doubt this is going to fill. Yep, it's not going to fill. So I think I just have to wait a little bit longer on that one, which is fine. I've got a profit trap on that one. I believe if I put the trade back in, let me go into this trade. 1, 2, 3, 4. Analyze. Oh, come on. There it is. So this is the trade. So I have live price right here. Live price right there. I have all this is $300 per contract as long as price stays anywhere above 26.50. If we're above 26.50, $300 per contract, no problem. We have a profit trap right there that offers me a little bit more profit. That would be a max out of around $1,500. So it's either $300 and it can go up as far as it wants, down a little bit, down a decent amount. As long as it's above 26.50, I keep my $300 per contract. I have about a 5-to-1 profit trap on this one before I take on any risk. So we'd have to have a pretty nasty move in silver for that to be the case. So I'm okay with that trade. Okay. All right. Euro yen. Look at some currencies. All right. Let me get through this top down. Bitcoin, expect some more volatility in Bitcoin. I would look for resistance and support, probably some indecision. I like the 90K mark and I like the 80K mark. Not drawing that very well, but 90K is right around here. We hit 91,000 on that little sell-off from the weekend. 90K I like as a kind of round number, and 80K gets us back into some of these pullbacks and efficiencies. I'm still long on Bitcoin. Okay, I think Bitcoin is a dollar alternative play. I think it is it's like the interesting decentralized story. It is a Web 3.0, a digital currency, store of value, scarcity. It's everything future, optimistic wise. Bitcoin is probably in that conversation. So it doesn't mean I'm crazy bullish and maximalist, but it means that as a trader and define risk, I think there's good upside potential and asymmetry with the right strategies. So I'm still just being patient, waiting to see how I can get my fills. But I like adding into some of my exposure at the 90 and 80K mark. Those are my correlations. MicroStrategy has earnings tomorrow morning. We're going to see if MicroStrategy is going to kind of separate itself as a stock that is purely based in Bitcoin or if it's a tech company as well. For the last 12 months, they've essentially become Bitcoin. And obviously, there's a lot more volatility. It's like 2 to 2.5 times more volatile than Bitcoin, which makes it a little bit scary. But the premiums are pretty impressive, and there's resiliency in this as well. I just bought the shares and added a collar trade, and I'm looking right now to get this called away around 310. I'm looking to continue to roll it if I can. I'm happy to roll it if it looks like it's a high probability trade. As long as Bitcoin remains relatively bid, I'm pretty sure MicroStrategy stays there as well. but I'm not looking for any type of crazy long-term trade on MicroStrategy. Coinbase, this one has earnings next week, so I'll dive into that one. Ethereum had a massive sell-off on Sunday to Monday. I'm glad I'm out of this one. I'm staying out of this one for right now. Copper. Okay, Copper. I said this. Sounds like an old-timey movie. Okay, Copper. You never take me alive, Copper. The play on Copper, to me, I said this for the last like 6 months. If China looks good, Copper is probably looking good. So China is getting some pretty good flows. They are certainly looking like they've lifted animal spirits since the September launch, and some more positive stimulus talks going into the end of the year. We'll know more in March of this year, but the way that prices are moving right now, it does seem like China's getting a better push to the upside. I looked at a trade on copper, and I was trying to take a similar trade to what I did on silver futures, which means I wanted to take a trade down here. The issue is I couldn't get a trade for less than like $2,000 to $4,000 risk for maybe a $300 to $500 profit. So I don't want to necessarily say that's the bottom in copper. I think that I want to go safer. I want a higher probability, and this can go higher. But my concern is that copper is just this trade. It's just a wedge. It's just a wedge. And even though this looks promising right now, I don't want to see copper turn and do this and give us a lot of no direction. But I will say if it comes back down to $4, I will consider some plays on copper that get me out of the way, some income. It's probably going to be some type of profit trap, and then risk. So I can take in some credit, I can put in a profit trap, I can take on my risk, but that's the type of trade I'd like to put on for copper. And of course, if we go bullish, then I'll get more directional with a bunch of credit spreads and or debit spreads. But I'm not convinced we're going straight up right now. Okay, Japanese yen, nothing right now. I'm still long the Japanese yen through September. FXY, I'm long. DAX fighting back a gap from the weekend. Same thing on the FTSE. Argentina, really indecisive, but I do like this. I just want to buy it lower. Here's HSI. This is a nice little rip from the bottom in January. So we've had some good flows out of China for the last, basically the last month. I mean, it's up 12.5% since the lows in January. So that's only like 3 weeks of trading, but that's a pretty impressive run. Also, we are taking out previous highs. I think this is a good spot to look for China. If China comes up into this level, could this be intermediate resistance? Of course it could. Could this be a larger head and shoulders pattern? Yes. Could we pull back and then have an accumulation zone? Sure. But if this ends up materializing to a head and shoulders where we break this neckline, I'm measuring this thing back up to these highs and possibly higher. Right? I mean, this could be a really simple trade. You have a swing, you're building up a potential bullish pattern. If we break that neckline, this would be the A to B, forming a C and projecting to a D. So trade your symmetry. So I think the highs are a great target. I think going through that high is where I would get out of this trade. So I do like China. My exposure is pretty light, but Alibaba, Baidu, FXI, KWeb, MC, I think it's MC, what is it? Oh, fudge, where'd I put it? MCHI and JD. So these are the trades that I'm in. Alibaba, Baidu, I have some shares and options. FXI, KWeb, and MCHI, I closed out for profit. JD, I'm still in. I rolled it. Actually, I looked to roll it today. I'm going to consider. I mean, I don't have to do anything, but I would like to roll it through earnings that come out in March. So I'm going to look at. I can look at that one tomorrow. I've got that written down. I put that on my to-do list from this morning. But anyway, I like the plays on China. It's not crazy exposure. I know that everyone says China's uninvestable and nobody trusts them. I get it, but it's world number 2. So to me, it looks a little bit more attractive because they have some upside potential. I think the issue is, how much contention or how much animosity is there going to be between U.S. and China this year? Is it all optics or is it real? I mean, I've said this for years. I think U.S. needs China and China needs U.S., and they have to learn how to get along and coexist as frenemies. They don't have to, it's not kumbaya, but I think they have to find a way to let the global economy run without tons and tons of friction. So, it always seems like, I don't know, it could get way worse. I mean, yeah, maybe it could, but I think they need us, maybe not as much, but maybe they do. I have no idea, and it's hard to say, and it's all risk and it's risk capital, but these are the trades that I'm taking. Okay, all right. So that gets me through pretty much my list. I've got some other stocks and stuff like that, but let's go currencies. So go back DXY, start here. So dollars dropping, and with that, I like the fact that I'm watching the 10-year as well. So dollar dropping and the 10-year going with it. That's kind of my favorite thing right now. The U.S. 10-year. Oops, I'm going to go to Trueflation. 2.19. We've actually seen a pretty decent because we buy everything they make. That's why they need us, because 70% of our GDP is buying stuff. So, I mean, how many things do you have in your house and your life that's made in China? Probably lots. So they like us buying stuff from them. They like Western money. They like investments. The difference is, I mean, President Xi is a little bit more fortified in his leadership as opposed to going to accept Western money and going to accept Western markets and capitalism. There's still a lot of stronghold from the government for this current regime. But if that opens up and you get like freer uh, trade flow and less friction, I mean, China could be a very powerful force. I mean, I think the long game is they want to be world number one, you know, but you just don't know how, like I said, contentious is going to get. All right. Anyway, on this, here is a little Trueflation, which is a third-party calculation of where real inflation is at. This is my favorite thing. It's not that I'm curious about the number. I'm not saying this and saying, okay, CPI for the US is going to be down to 2.19%. Not even close. Okay. What I am liking, though, is that when we saw the Fed cut rates in September, inflation bottomed here, and we saw inflation for the last 3-4 months print higher. That was accurate. What I'm looking at now is the fact that we've been going down on this reading. And so I am hoping that this is a time where inflation did trend back up, but we are showing that everything is heading in the right direction and possibly heading lower. So if we can see that, CPI will stop going higher, maybe it staves off or starts to decrease. PPI stops going higher, starts to stave off or decrease. Or core PCE, same thing. We've been going sideways to slightly higher. Does it go sideways or lower? I mean, we need to see those data points. And again, it's not a true look at like real inflation, but it's what the government's watching, what the Fed is watching, and it's what every headline investor is looking for. But I like this third-party measure because going down is a good sign to maybe bring the dollar down, bring the US 10-year down, and your 5 to 10-year, 15-year, 20-year, 30-year financing looks a lot better with lower rates. Okay. So anyway, thought that was interesting. Like this has been a big improvement. I was very skeptical going into 2025 that inflation is not going to get any better, but this has given me a little bit of optimism that maybe we do get some improvement. Okay, all right, currencies, and then I'll wrap things up. Aussie CAD, I'm still holding long. Swiss pairs, I'm still holding long. Aussie Swiss, that was a little open from Sunday. I'm still long with measure moves higher. I'm enjoying my positive swap right now. Yen crosses, I'm not doing much with. I just said yen crosses, watch these lows to buy. Okay, I don't know what I mean. The Japanese yen in general, if you look at the dollar yen as your main gauge, I mean the dollar could get weaker. This makes for an interesting trade. It may not be a full-on basket trade for the yen, but it may be a trade where this high and this low end up trading into some type of range, right? Do we have this about to set up a pattern? And then the dollar drops. And maybe this is led not just by Japanese yen, maybe it's JPY stability, but it's actually dollar weakness. I don't know. But if you see the dollar yen is dropping, but the Aussie yen is up, it's not led by the yen, it's led by the dollar, right? If you see the euro yen is up, but the dollar yen is down, it's not led by the euro, it's led by not led by the yen, but it's led by the dollar. So again, it's tough. It's tough to see like what is exactly the yen going to do. What about the Bank of Japan? What about interventions? This is a good gauge, but there's no fixed reason to say like, oh, the BOJ is going to intervene at 162. They can do whatever they want, and that's always how they operate. So I continue to be pretty passive on the Japanese yen. I watch it, I'll monitor it. I'm trying to catch whatever macro fundamental wave is next, but it's so hard. Like this was the big wave that I caught like an idiot 2022 when I was long the Aussie yen and long the euro yen, and then I was somehow short the dollar yen like an idiot. I got my money back, but I fought this thing for like 6 months before I got out of the trade with profit. So frustrating. But here we are again. So I don't know if this is all going to set up for one massive, maybe it's a big wedge, maybe it's a lot of indecision here and a lot of indecision here. I would expect this to be like this was so disruptive over the last couple of years. I wouldn't be surprised to see the dollar yen and a lot of yen crosses just remain in a big wedge, right? And the same thing here. Like we go up, we pull back, we go up, we pull back. If we go up again, maybe this is a resistance level. I'd still wait for the structure to break and then say, okay, maybe this does want to head back down to range lows. That is a trade I could get behind. Sell, stop, sell, stop, sell, stop. Line this thing up, see if it wants to flow that way. Cool, that's a good trade. Define risk. But if it doesn't line up where the entire yen looks that way, it's going to be something where it's the dollar versus the yen and they're separate. The dollar's getting weaker versus the yen getting stronger. Not sure yet. Okay, let's see here. CAD Swiss, still long on CAD Swiss. Ooh, that was a nice spot to buy that thing at 62. I've already had a couple entries in at 62, so I'm not doing anything with it. But I've got, I don't know, 10 plus positions on CAD Swiss long. I still like the measure move up here towards 65. There's a big pocket around 65 and change. So I do like that trade. Swiss yen, nothing there. Euro Aussie. I think that this is a big range trade. Euro Aussie, back down to 600, maybe capped out around 68, just a range trade. Euro CAD's been really volatile. I'd stay out of this one. I'd stay out of Euro CAD and Pound CAD for right now. Euro Swiss, I'm still long. I'm getting some pullback, so I'm stacking my way in on the pullback and the upside. Euro Pound, I closed out of that trade for a win. It got above my 200 moving average. I looked at my profit target. I was just off my profit target, but I took the profit anyway. Anyway, that's fine. Yen crosses. Here's Euro Yen. I don't think there's anything to do. I think Euro Yen looks something like this. There's support. There's resistance. So does it come back up into this like 164 handle? Does it come back up to 166? That to me looks like a spot that we could buy and sell from. If it pulls back into this area, maybe a little liquidity grab up there towards 168 to 170. Does it come all the way back up to the same high again? Maybe. But right now it shows that there's higher lows being hit. Okay. And if this is a bull flag, so if we go up here with a little bit of a bull flag, then perhaps there's more upside and this support level holds. But watch that high, watch that channel. And I mean, as you're going here, it's like trading short term. If you're in the currency market, trading short term on yen crosses, follow your alignments, take your trades, go to break even or better, and let the thing trail, try to grab some profits. Have some profit targets in mind. You're in New Zealand, also a range trade. If we break out of this range, I'm curious what happens next. So could there be a fake out to the upside and then a really big pushback down to support? I'd actually really like that trade on Euro New Zealand. If we can fake out and hold this 8,600 level, that'd be a great trade to sell high and see this thing come all the way back down from 86 down to 76. That's a 1,000 pip range if we get it. So I want to see some type of topping pattern in Euro New Zealand. I'd like that trade a lot. Euro dollar pulled back, but I think there's still a lot of resistance at that 105 to 106 handle. I don't know if the dollar is going to get to parity. I don't know if euro dollar is going to hit here and then fall to parity. If we have risk off trading, then sure. Risk off trading probably gets the dollar to parity, the euro dollar to parity. Risk on trading, we've got to get above this 106 level before I'm going to say that the bulls are really back in control. Otherwise, I think this favors probably the stronger economy right now and possibly the yield of getting dollar over euro. The ECB has been cutting rates. The Fed is pausing right now. And I think we could still have a run to parity. I'm just not doing anything unless we hit like 105 or 106. Donnie, you are correct. We do have non-farm on Friday this week as well. Yep. Let's see here. Pounds. Pound Aussie. Nothing on that one. Pound CAD, stay out of. I don't like that one. It's super choppy right now. Pound Swiss, I'm still holding long. Big range trade. Hopefully get back to like 117 or 119. Pound Yen. Your guess is as good as mine. There's some support in here. Maybe a big wedge. I don't like that trade. At some point, it's going to have to make a decision, but it could also just be, if it doesn't break that low, it's not a sell trade. This has plenty of room for this swing to go back and forth and back and forth and back and forth and back and forth until it decides that maybe that's the trade, that we break structure, pull back, and then we have our range trade. I don't care if I wait 6 to 12 months for that trade. If I get a setup that I like, I'm going to take the setup that I like, but I'm not trading something that I don't like. Pound dollar. Same thing on euro dollar. Maybe there's a bit of a fight here, so we pull back a little bit, work our way back into the backside of this trend line. But I'd say between probably the 128 handle, 128, I'd like to short this. 130 be my top level. So I don't expect price to really get above 130. But I'd wait for some type of trend line break and try to resume this downtrend if we have dollar flows. But not ready to short it yet. I'd like to see it get up to like 27, 2800 before I short it. New Zealand CAD, I'm just leveling into this one. This one's fine. So lows, lows, highs, highs. I'm just going to buy. So buying, buying, scale in, take it back to the halfway point. That's profit. That's target one. This target two. New Zealand Swiss, still holding long. Measured move just above this 5,400 handle. Also, I'd love to get this thing. If we can get a 5-wave move measured out of this or a double bottom, I'd like this trade there and then cap that, double it. We should be up to like 5,700. 6,000 would be a fantastic profit target, medium to long term on New Zealand Swiss. Plus some positive swap. New Zealand yen. Leaving that one alone for now. New Zealand dollar. I'm still long on New Zealand dollar. I did get filled at 56.05. There's my break even at 57, about 57.25 or so. We'll see if this one comes back and I close this at break even, take a winner and take a winner. I will take that trade off around 5,800 or 5,850. So I'll watch that one to see what the dollar ends up doing. Dollar CAD. This one's a bunch of noise. Holy fake out. I told everybody, man, watch out for this liquidity hunt right there at that top. And man, did that happen. So I was long the dollar CAD, took my profit up there, and because it was sitting here with all these highs, this is what makes forex trading and futures trading very difficult. We tested once, we tested twice, we tested 3 times, we gapped higher and faked out higher. Not a lot of traders can hold a dollar CAD position with a stop loss when you're looking at 4,500 and this thing gaps up to 4,800. Not many people are placing a 300 pip stop loss. But that is the games that these markets can play, which is why I'd rather trade options, because you don't have to deal with that nonsense. If I had a line in the sand and said, look, if the dollar CAD is below 4,500, I make money. I don't care that it's up to 4,800. It's defined risk. If it's below 4,800, I make money. Right now, I'd be profitable on the trade instead of getting stopped out. It's extremely frustrating when the market plays games with us like that. But it happens in Forex and it happens in futures. If you don't know this stuff, you're going to lose money, right? If you're not careful about this stuff, you're going to lose money. But it's games. Now, the good thing is now that this is out of the way, if we're flushing down here, this could be a break of structure, pulling back in to then have another leg lower. And we can come back and maybe find this past resistance becoming support, and we can see the dollar CAD get back to 1.40, which would be pretty nice. That's another 300 pips away. So we'll see what happens. Okay. All right. Dollar Swiss. I'm out of that position. I took profit near the highs around 92. That was right there. High was 92.01. Wow. Talk about getting out at the profit target. I literally had my limit set on 27 positions at 9,200. So boy, am I glad that hit. All right, and now I wait. What else? Dollar yen, I did. So there's your currency rundown. There's your stock rundown. There's some individuals. There's some earnings. There's some futures. There's some gold. There's some silver. There's some Bitcoin. A little bit of everything. Okay, it's just after 4 o'clock. I will let you go for today's final hour. Just to recap, if you're interested in training some newsbreakers with me, I'll start that service next week. Monday is going to be the first webinar to get involved, and then Tuesday through Friday we'll be trading. I'll probably look at throwing in a live class. Alerts will come out. Like if you get involved, I'll have the alerts ready for you by Tuesday for the live trades that I'm taking, and then also getting into the classes so we can talk through the strategies and talk through the methodology. Okay. All right. That being said, I will let you go and have a good rest of the day. And I'll be back here tomorrow. Make sure everything's good on the calendar. Yep, tomorrow's pretty straightforward, and off we go. All right, thanks, everybody. If you are watching on YouTube, kindly hit the thumbs up button. Support the channel. We like the engagement. Leave comments. All that stuff is great. If you're in the chat live today, thanks for being here. So Financial Wars, that's youtube.com/Financial Wars or youtube.com/Chris Pulver. If you're in my Telegram channel, it is right here. I posted that link earlier. I'll post it again. So here is a chance to join. Free Telegram. Chris Pulver Telegram. There you go. And Chris Pulver Discord. There you go. Okay, more the merrier. Have a great day. I'll see you tomorrow. Thanks. Bye.